Okay, hello and welcome. May I remind everyone present that the meeting will be recorded via the internet and this recorded archive for future meetings. Okay, the first thing I'm going to do is I want members and panelists to introduce themselves and can able to hear the chairman's introductions. Can you all hear my introduction, first of all?
Yes.
Yes.
Okay. Okay. The second instruction I'm going to ask is that could all participants mute themselves when not speaking in order to avoid any background noise or feedback when other participants are speaking? Thirdly, if the participant wishes to speak, can they put either their hand up or use the hand up option on the application? You can always put something in the chat as well, because I will be monitoring that if you wish to speak. If any participant has difficult hearing or being heard, they should let either myself or supporting officer, which is Catherine, if they have a webcam, then they could try turning this off, as this will, in order to help broadband or Wi-Fi bandwidth. So if you've got any issues with the connection, the first thing I would suggest that you turn off your camera first of all. Next point, if a participant still has any difficulty with their connection, can they please let Democratic Services know if the presenter can dial into the meeting using a telephone number provided on the invite. If the above should occur, the chairman to say for any technical reason any party to proceedings unable to continue the hearing will be adjourned for a short time and allow contact to be made. It's important to remember that all parties must hear all the proceedings unless they themselves decide to leave. What I've asked you all to do before we start the meeting is just to do a brief introduction to who you are, because I know we've got some visitors at this meeting. So I start off with myself. I'm Mike Wilson, chair of the committee. Okay, if we can go around in order, Councillor Cox.
Jeff Cox, Deputy Chairman.
Okay, Councillor Charles.
Janice Charles, councillor for Barry in the Vale of Glamorgan.
Okay, have we got Rob Crowley here? No. Okay, Councillor Drake.
I'm Councillor Pamela Drake. I represent the Castellan ward in Barry.
Thank you. Councillor Mahoney.
Yeah, Kevin Marnie, Surrey Ward.
Thank you. Councillor William. Okay, and can we have the officers now? Can we start off with Gemma, first of all? Gemma.
Hello, and Gemma Jones, Principal Accountant.
James.
James Doherty, Principal Lawyer.
Lorna.
Lorna Cross, Operational Manager for Property.
Okay, and also we have got presenters from Tilney Financial. If you could say who you are, please, as well.
Hi, I'm Richard Stones. I'm a Chartered Financial Planner for Tilney.
Thank you. And David, do you want to introduce yourself as well?
Yeah, David Reed, Investment Manager at Tilney and the responsible contact for the portfolio.
Okay, and also understand that Councillor Penrose is also present as well. Do you want to introduce yourself, Councillor Penrose? Okay.
Councillor Penrose, you should be able to unmute your microphone.
Can we hear him? Okay, we can put him for the record anyway. Okay then, we now go on to the start of the meeting now. Apologies for absence. Got any recorded?
None received, Chairman.
Thank you. Okay, now how are you happy for me to sign the minutes of the 20th of January and the 24th of February 2020?
Yeah, move the minutes.
Thank you very much. Okay, anyone second that? Thank you very much, Councillor Jeff Cox. Thank you. All right, any declarations of interest? Oh. Okay, no, I can't hear any declaration of interest. Okay, we now go into the presentation, okay, which is led by Tilney Planning and Investment Report. Okay, if we can start that now, please.
Hello. It's Richard Stone speaking. It's great to see you all again. Even though we're doing this in slightly sort of different circumstances to previous years, really today what we have prepared for you is very much the same as in previous years. So from my point of view, I run the account with Tilney, and I guess one of the most valuable things that tends to come from these meetings is that we will answer any questions that are obviously relevant. It's been a really strange year, but the investments have actually held up very, very well, considering everything that's been going on. So what I will do is pass over to David Reed, who has the responsibility of running the accounts on a day-to-day basis, and then perhaps suggest that we break for questions. I guess the only question I'd like to ask initially from a timing point of view, is there a certain period of time that we need to work to today?
Say something here. I mean, I think obviously you take as long as you like over this presentation, but are you looking at about half an hour, are you?
Yeah, in previous years, it's generally run at about half an hour or so. But obviously we can tailor it to whatever timescales you have. So we'll try and get to about half an hour if that's okay for you.
That should be fine. That should be fine. That should give people the opportunity to ask some questions as well. And I was going to also ask you, do you want people to ask you questions at the end of the presentation rather than during it?
I think we're really happy to take questions as they come through. I mean,
okay,
clearly
fine.
There may be things that sort of pop up this year that are more relevant in these COVID times than normal. So please just ask away as we're going.
Okay, I think if that case, if I just intervene there, if I can get members to ask questions in the chat, okay, so that perhaps you can see that as well. Can you see the chat on there?
I can see a box that says chat next to it, so it's not a familiar system for us, but I'm sure we'll get there.
Okay, fine. If there's anything you can't see, just let me know. All right, Dan, and I can then refer it to you and ask for you to answer it. Okay, if you can't see it. All right.
Right.
Okay,
Right.
just go ahead when you feel you know, at liberty to do so. Okay.
Thank you, David. Are you okay to start the presentation? I think at the moment your screen isn't sort of projecting the presentation as a full screen.
Is that better? Can everyone see that? Is that clear?
Yeah, I can see that clearly.
Fantastic. Richard, any other opening comments from you before I jump into the portfolio and what's happening in the world before I get started?
Nothing other than I think what everyone's aware of at the moment. I think there are lots of different forces, some of which that have already happened. Clearly, COVID has been the main event so far this year, but we've also got Brexit on the horizon, and also an American election, which isn't that far away. So I think probably covering off all of those areas and how that affects the portfolio, especially considering that the portfolio is really designed to produce income to support the needs, and therefore if we focus on that, I think it's probably where we would start normally.
Okay, fantastic. So then, without further ado, just before I start talking about the portfolio and where we are, just to remind everyone, when we talk about the investment markets, there are two broad markets that are the most of interest to us. There's the stock market and the equity market. So that's buying shares in companies, and then you get some of the profits from dividends from the companies and a share of the profits, but also some of the risk. And the other big market that we're most focused on is the bond market. So that's when you are lending money and you're buying debt instruments. So in the UK, for example, we have gilts from the UK government, and in the North America, they have the Federal Reserve, so treasury bonds. So the equity market and the bond market are the two big asset classes that we look at as investors, historically speaking. So there are others, sort of property and things, and we'll get into those in a bit more detail, but those are the two big markets that we're going to look at, and they're the biggest part of the portfolio. So just to make the point at the outset, Richard said, the defining event so far this year has been COVID-19. That's hit markets very hard, particularly in March, and we saw the UK stock market fall by over a third, and it struggled to recover since then. And year to date, the UK stock market is down around 20%. Just to reassure you all that the portfolio that we run for you is only down around 3%. So we are down since January, but it's a relatively small, modest fall compared to some of the other situations out there, again, with the UK being down by 20%. And the first point to make about COVID is that it's hit different parts of the market very differently. At Tilney, we have a real focus on companies that are neither financially leveraged or leveraged to the broader economic cycle. And that tends to mean that we are underweight some of the more risky areas, like the more risky hydrocarbon stocks and some of the less secure financials. So parts of the market that have been hit the worst by COVID, we have had less exposure to. That's particularly relevant for the portfolio because we run the money on an ethical mandate. So we're looking to actively avoid exposure from fossil fuels, which with the oil price being where it is, we can't drive anywhere, we can't go on a holiday. So some of those companies have been the worst affected by this. So that's been a positive thing for the portfolio as well. But perversely, some of these parts of the market are the biggest income payers. And the main objective of the portfolio is to kick out that £40,000 yield to fund the distributions for the charity. So not being able to invest in those areas does make getting the income target more difficult. But again, going forward, we're happy. We think that we can do that as where the portfolio is currently positioned. Just to make a very quick point that when we look around the world at the moment, the portfolio is globally diversified, and that's very important now more than ever because the different country stock markets have very different profiles. So for example, the US market has a very big tech bias, whereas in the UK, we have a much more dominance on banks, insurance, and oil and gas, other energy companies. Again, these are some of the areas that we don't want to be investing in, given the ethical mandate. So the key message there is that we are globally diversified, and that's very important at the moment. Just keeping to time, currency is important at the moment, particularly with Brexit. And if you look at this chart here, it shows the strength of sterling since the start of the year. Now, when the line spikes, that's showing sterling weakening. Now, sterling is what we call a risk-on currency, which means that if we get a period of volatility, because we don't really export much in this country, and most buyers of sterling, they want to either buy a London flat, for example, or buy the UK stock market. So given that our stock market tends to be a more cyclical index, this means that when there's a period of volatility, sterling tends to fall, and we saw that in March, and that's why that chart spikes up and it shows the strength of the other currencies. But we've also seen a big weakening recently, and that's all due down to Brexit, and the market is pricing in the chance of a more abrupt departure without a deal by the end of the year. That has increased from before maybe 20% to nearer 40%. And the key point to make here is that the portfolio as it's currently positioned is a globally diversified portfolio. And if there is a fall in the value of sterling because of because of an abrupt Brexit deal, the trust portfolio is ring fenced from that and actually will benefit from a fall in sterling. So the way the portfolio is currently positioned, it is a natural hedge against some sort of abrupt, hard, unplanned Brexit outcome. So that's the first point to make there. The other geopolitical event at the moment that's on people's minds is the election in America. So we have two candidates, Mr. Trump and Mr. Biden, and on the investment grounds, we aren't really that concerned who wins. What we do want, though, is that someone to win clearly and it to be a non-contested result. The worst case scenario is some sort of very narrow win where there's a runoff and this sort of goes on into the new year and it drags on. We want to have clarity and to move on into the next phase of things. The only implication it could have is that if there is a Biden victory, he has indicated that he's quite keen to tax hydrocarbon energy companies in order to fund more spending on renewables in America. He's very much a green renewables energy guy, but given the exposure in the portfolio to oil and gas is basically zero, that isn't a concern for us. So it's not something that we are actively trying to predict or hedge against. The main thing here is that we just want someone to win and someone to win comfortably so we can move on to the next phase. That's the real message there. Talking in terms of the income from the portfolio and the current environment on interest rates and on yield. So the big policy response to COVID has been that we've cut interest rates and we have done additional what we call quantitative easing, or for the lack of a better term, printing money effectively. Now, we did this after 07-08 when the banks had to be bailed out. I'm not sure if any of you are particularly well read on this, but effectively after the financial crash in 07, most banks globally, particularly in the West, were technically insolvent. And we effectively printed money, and this money was used to buy the bad debt from the banks. Effectively, this money then went and sat on the bank balance sheet and bailed them out. We're doing more quantitative easing, money printing, whatever you want to call that. We're doing that now, but the big difference this time around, this year, is that this money isn't going to sit on bank balance sheets. It's going to finance fiscal spending by governments. So when the UK government wants to spend money, it issues gilts. And then the biggest buyer of those gilts at the moment is the Bank of England with this money. So we think the possibility of inflation going forward could be higher than it has been over the last 10 years. Inflation has been quite benign, just something that we are looking for in portfolios, just being positioned for going forward. And what that means in the portfolio is that we have a real inflation bias, focusing on investment grade companies that frankly aren't going to have any trouble. If we do see default rates picking up going into the winter and the autumn because of COVID, the kind of bonds that we are investing in are going to be ring fenced from that volatility. But also, if we do see inflation pick up in the next year or so, that isn't going to erode further what's already historically very low yields in the bond market. We've seen interest rates come down hugely over the last 20 years. And then back in the 1990s, if you were an investor going into a pensioner going into retirement, your bond portfolio would get you 10% comfortably. In the current scenario, the bond market generally sits on negative real yield. So it's a really challenging environment to get an attractive income yield in a safe way. But what is interesting is that in the last few weeks, we have seen a slight pickup in sovereign yields. And this is the cost of capital that the White House, that the UK government and so on have to pay when issuing new debt. And I'm beginning to wonder, are people becoming more aware of the possible risks of inflation, and could we see yields rise in the future? I think that's a fairly open debate at the moment. But again, it's just making the point that if we did see a pickup in inflation, lots of these bonds in the market. To give you an example, the UK government gilt for 10-year is giving you a 0.2% yield. That's an annual return of 0.2%. So if you have any sort of inflation coming forward, that will erode that return very quickly. So we have to be very, very selective on the kind of bonds we're buying in the portfolio, focusing on, again, where there's a quality coupon, investment grade, and we have very minimal exposure to nominal yielding sovereign debt. We prefer the inflation linked element to that. So that's the world in sort of 5 or 10 minutes. Just to recap in terms of the portfolio and how we're positioned in the portfolio. So I mentioned at the beginning that the two big asset classes are equity and the bond market. So the equity is the engine of the portfolio, and that is just over 40% of the portfolio, and that can go as high as 50, but 40, 42% is around the typical weighting. So within that, we are globally spread. We have a bias to the UK because we're trying to produce UK income, and the UK market is the best place to be for income. We have exposure to North America, Europe, and being spread as well. And that's part of that Brexit risk. If we do have a fall in sterling, all of these investments will rise in value in sterling terms. So the portfolio is a natural hedge against an abrupt Brexit. And then elsewhere in the portfolio, we have the exposure to fixed income, again, with a real bias to investment grade, quality, safe issuance. So if we do have any sort of volatility, and I think we are going to see further volatility in the autumn and the winter, I think we will see unemployment increase. And I think we will see, unfortunately, some businesses go bust going into the winter. And that's when we want to be really alert and aware of the possible default risks, making sure that the firms that we hold are of the highest possible quality. I'm very happy to go through the portfolio line by line, but that might be a bit too much detail for this scenario. But I think just to make a point in closing about how we're positioned, the equity in the companies that we hold are the firms with the strongest balance sheets that are the most resilient in any sort of volatile periods, and that will come through this period stronger, because it means they can acquire the other companies that are weaker when they go through distress, and sometimes they go bust. We can effectively acquire those companies. It means that they can consolidate their position on the other side. Our base case is that there will be a vaccine at the end of this year, start of next year, but we are very conservative, and we're always thinking about, well, what could be the worst case scenario here? But our base case is that we do get a return to normality at some stage over the next few months, and that we begin sort of a journey back to normality, and that will lead to a sort of fairly broad swing in markets over the medium term. And that links into my final point about the income of the portfolio. So this year, we saw financial companies and some banks in particular, and insurers, they effectively were stopped from paying dividends. So this wasn't reported widely in the UK, but take HSBC, for example, it's very much a global bank. Most of its money comes from China, Hong Kong, and that part of the world, but it's listed in the UK. They were told by the UK government that they couldn't pay out a dividend to its global share base. And this was a massive problem in parts of Asia, in China. They saw it as a very aggressive geopolitical move. Because lots of Chinese investors, for example, hold HSBC shares for the income. And effectively we said, we want you to not pay the income and hold it in your balance sheet, because we don't want to have to pay if the worst case scenario happens and we have to step in again. We don't want to have to pay for that cost. So it was a really bad year for income, and lots of companies used this year as a chance to rebase their dividend. So you have seen lower income over the last 12 months than we thought we would see this time last year. We have made some changes in the portfolio recently, and we are comfortable and we're confident that going forward we will reach that 40,000 target. but just to make the point that the last 12 months has been a bit of a tricky time for us as income investors. So that is a very brief sort of 15-minute, 20-minute summary of the world and the portfolio. Are there any questions from anyone here about the markets, about the ethical views in the portfolio? Any comments at all, or anything else that I can help with?
Yeah, can I ask any members if you've got any questions? Because I got a couple.
None.
Okay, I'm going to ask a couple of questions. Okay, you mentioned about the Bank of England. Obviously, you know, bailing out a lot of the financial industry at the moment, and clearly like they did in 2010 and 2008. But what I think what's interesting is that the Bank of England holds quite a lot of gold reserves. And what you haven't mentioned is about the rising prices of commodities in particular. And I just wondered, perhaps, why aren't we investing in things like commodities, for example, or are we? Question mark.
Yeah, good question. Do you want to go through them all, or shall I answer each one in turn?
I think that's the first question. The second question is, obviously, you know, you mentioned about the American election, obviously what uncertainty, but one of the things, obviously, that is an issue is if, to say, for instance, there is instability in America, I should imagine the value of the dollar will go down, and what effect will have on our portfolio in particular if that does happen. That's my other question.
Fantastic, thank you. And they're two good questions, so thank you very much. So on the subject of commodities, so just so everyone on the conference knows, when we talk about commodities, they have been historically used as a hedge against inflation, and the big common ones are oil, gold, and you can also get things like coffee beans and cocoa in a broader basket, but oil and gold are the most popular ones. Now, gold to me is a natural hedge against currency debasement and inflation. And for most of our clients, we increased gold in the portfolios back in March this year when we saw the response to what we were doing with COVID, with lots more money printing. And the price of gold is up by about 20% since the start of the year. Conversely, some of the oil and gas parts of the commodity basket are down very sharply. So when you look at the commodity basket in the round, it's a bit of a mixed picture. Now, one of the points I wanted to pick up with you today is that because we run the portfolio on an ethical basis, that has historically stopped us from holding mining companies and from things like holding gold in the portfolio. Now, I think going forward, with currency debasement being much more of a prevailing theme, I think, over the next few years, if one thing that we maybe should consider is, do we want to hold gold in the portfolio despite the ethical framework in which we're operating? And that's probably a question for you guys to discuss, then let me know about it. But I think there is, as you say, Mark, a strong case to hold gold in the portfolio going forward if the ethical criteria allow us to do that. The second thing, on the American elections, the base case that we have here is that the way the system is designed over there, and the electoral college system, is that we think there will be a winner. The polling at the moment suggests that will be Mr. Biden. I personally wouldn't want to put bets on that personally, but our base case is that we will have a winner. And the message from me to yourselves is, whoever wins, your portfolio isn't going to be affected either way because of we haven't got that hydrocarbon bias. As you say, Mark, if we do have a hung US result and that drags on, that could weigh on the dollar, but also that will have ramifications probably for the wider world. And actually, when you have global events that are volatile, the dollar as the world reserve currency tends to do quite well. So it would depend on exactly how the US and how bad it was and how dramatic it got. But actually, it might counterintuitively, if there is a uncertain result there, it actually might lead to some dollar strength if people want to hunker down and be more defensive in their portfolios. You'll probably see the yen rally quite strongly as well. And we hold Japan in the portfolio as well. Is that helpful, Mark? Is that useful at all? Have I covered off those questions?
That was really helpful. I got
Thank
Councillor Cox on the line who wants to ask a question as well now.
Great.
Yeah, thank you, Chairman. I noticed we have a number of ethical investments, and in fact, you bought shares recently in Trojan Ethical. Is this because you see them as a good investment, or because they're ethical?
So the answer really is both. Now, any portfolio at Tilney has what we call a light green ethical bias anyway, because generally we don't buy overweights in firms that are either financially leveraged or exposed to the wider economic cycle, which tends to mean that we're underweight oil and gas, miners, and some of those parts of the market. Although we do hold them for some clients, depending on what the rationale of the portfolio is. Now, my understanding with the Welsh Church Act portfolio is that we are looking to invest in a sustainable, responsible way. So we're looking to screen out some of those areas. That being said, Jeff, we wouldn't look to invest in any fund or any part of the market that we didn't think could be justified on investment grounds. So I'm giving you a bit of a long answer here, but I suppose the answer is we're doing it on ethical grounds and on investment grounds. I mean, we would never let the ethical tail wag the investment dog, if that's any reassurance.
Oh, fine. Because a lot of people think if they're ethical investments, we get a lower return, but it's not always the case, is it?
No, not at all. I mean, you know, in the portfolio we have things like Greencoat, for example, that have done very well year to date. I mean, if we have time, I'll just go through some of my favourite examples, if we could.
Yeah, sure.
So, where are we here? So hopefully you can see here now. But in this part of the portfolio here, there's a company called Civitas and Greencoat UK Wind. Now, Greencoat UK Wind is a company that Tilney helped launch about 13 years ago now with the UK government, the Green Investment Bank. So they've got a dozen sites all over the UK providing wind energy now for over 1 million homes. And they've just come to us now looking to raise more money because they want to basically buy the site and get some more wind turbines going. And they are targeting a total return of in the region of 7-8%, which has RPI linked inflation and protection, because the contracts they have with the government is they guarantee the price of the energy. So it comes back to that inflation argument we were talking about a moment ago. So that investment's done very well year to date. It's up when the market is down, and it's helping the UK move towards a more renewable space. I mean, we haven't got to import oil and gas from Russia and Saudi Arabia, and I think this will become an increasingly important part of our energy makeup going forward. So it's a great way to not just make a good return, but to help the UK move towards that sort of place where it wants to get to. The other one is a company called Civitas, and what they do is they basically acquire, develop, and run social housing for vulnerable adults to let them stay in their homes longer, so they haven't got to go to, I'm not sure what the right term would be, but institutions or wards where they're sort of looked after by staff. You try to keep them in home for as long as they can. And again, this is all money that is effectively backed by local authorities, so effectively taxpayer backed, really. But they had a really good result from this. They basically run themselves like a charity. If you go on their website, it's effectively running themselves as a charity. It's a charity with government contracts, again, inflation linked, which we as capital providers, as investors, can benefit from. So it's about trying to find investments that we like on investment grounds that are also doing something positive as well, and trying to make that positive change. There's just two examples in the portfolio that we have there.
Thank you. Has anyone else got any questions? Okay, in that case, can I thank you, both of you, for your presentation? That was really interesting. And I'm glad that you're sort of managing it pretty well, given the challenging circumstances that we all face at the moment. I mean, obviously, I think the important bit is that we constantly review what you're doing. And I think you're obviously reviewing what you're doing all the time, which is really helpful to us. Have you got any questions of the committee at all yourselves?
Just
Sorry, David, you go first.
Just the one thing that would be interesting would be on the point about gold. I don't know if, because we have this ethical mandate, for lots of clients, that means no commodities, nothing that comes out of the ground effectively. I'm not sure, would you be opposed about holding gold in the portfolio going forward? And maybe
I think what we need to do is obviously discuss this probably after you've gone, if you no disrespect to yourselves, about where we go on these sort of issues, and obviously we take some advice from officers as well on the council about where we're going. As you know, I'm a fairly new chair to this committee, and I know there's some people been here a bit longer than me, and obviously I would take their views on board as well. I mean, I personally like the view that we are largely an ethical investor, but of course we also need to think about maintaining the £40,000 income coming through. So I do think we need to review our portfolio, as we all should, to be quite honest, given the market. But also there's something called, one of my passions is fair trade. And I know that, you know, something that we do need to look at is certain investments, perhaps in certain industries, which commit ourselves to more fair trade. But that's my personal view. But again, you know, I'm reminding everyone here that we are trustees, and one of the jobs of trustees is to maximise income from our investments. But you're absolutely right. We also think we should do it ethically. That's my personal view, and I think that's the view of the committee. But obviously, I think perhaps when you sort of leave us, we can have a brief discussion on this. And I've got one or two other matters to discuss, but I would like you not to be here. No disrespect to yourselves. All right.
Absolutely. A couple of other things maybe to consider as well from me. We have maintained the same risk profile for you since our relationship started, and every year we would always want to make sure that you're comfortable with that. We run 7 different gradients of risk. You are a level 3 on that scale at the moment, and that puts certain constraints upon us in terms of how much we can hold in things such as stocks and shares. So a bit of a discussion around whether there is any change necessary, and whether, if you were going to change, whether now is the right time to do it. Okay. The other point that I think is probably worthy of discussion around all of these issues is, as far as I know, the trust can only pay natural income, if I'm correct. It cannot pay capital. Yeah. Yeah. So, you know, in terms of the assets that we hold for you, it's always a bit of a discussion point as to whether those assets are going to produce capital growth, which you're not going to be able to access, or whether they're going to produce income. So gold is a good.
Can I clarify what you're saying there, just for the benefit of the committee? When you mean by that, say for instance you got a company, say for instance, that is sold out to another company, does that mean we cannot reach a capital gain from that? We're not allowed to, or is that capital gain got to be reinvested in the portfolio?
Yeah, so the capital gains at the moment, they're being stored up in the portfolio, and it's only assets that are paying a natural income. And gold's a good case in point, and David will know more than me on this, but our gold holdings, do they pay any income whatsoever? They may go up and down in value, but do they pay an income? It depends on what we're holding, I guess, David.
Yeah, so typically we hold physical backed, so we are buying gold in a vault, and there isn't an ongoing yield from that. So that's the sacrifice that you take. That's a hedge against inflation and a hedge against market falls to protect the portfolio value overall. So that's the opportunity cost of holding gold, is the lack of yield.
Okay. I mean, I think again, it's a sort of discussion we need to have without you guys around, because I do think that's a good technical matter to consider, and whether we are in our rights to do any change, I really don't know. To any other member before I finish this bit? Yes, Councillor Janice Charles. Janice, do you want to unmute
Yeah,
yourself?
I was just wondering if they could advise us whether the time is right to change now or not, because that's the sort of information we need from them.
Okay, do you want to answer that?
So I think from my perspective, you'll never get that time right, because it's uncertain. I think what we can say is that there are certainly 3 events which are going to be quite key over the next 6 months. So the vaccine, the presidential election, and Brexit will all be moved on in that 6-month period. Yeah, if you were to increase your risk at this time, then and those things were to go well, then clearly there would be a profit from that. But if they were to go badly, you could dent the fund, and I think that would be, in my view, it would be something you probably would not want to do until some of these matters are more settled.
Okay. All right. Thank you. All right. Can I thank you for your presentation? Okay. And we're now going to move on. Okay. If you want to. Okay. We're now we can ask Richard, David.
Yeah, Richard and David, are you okay to leave the meeting, or do you need me to dismiss you?
That's fine. I'll leave.
I'm not being rude, I promise.
No problem. Thank you. Bye-bye.
Thank you very much, both.
Cheers. Thank you.
Can I just double check, Councillor William, can you hear us? Can we hear you? I had been advised he'd come in on the phone. Right, we'll try and contact Councillor William.
Okay. All right then. I thought we have a little discussion, bearing in mind they're both gone, just about a few points that they made there. And I got some, there's 1 or 2 things that obviously we should also look at, is the cost of them as well. And I know, Gemma, do you have any views about that at all? I mean, should we review these people, given the situation that we're facing, or perhaps do we review them after a few months' time? I don't know what your view is, Gemma, on this.
I mean, it's very difficult to judge. It's a very tricky year in terms of managing investments. I mean, as a council, we don't have portfolios of this nature, and I'm not a financial planner. My feeling is we didn't choose Tilney. They bought out a company that we were already using. The problem is, if you look at a new investment advisor, they will sell the investment as we have at the moment, and they will purchase new investments at such time you crystallise any loss that you've made on the investment. And with investments, we're looking at a long-term horizon. My feeling is that perhaps the yield is a bit disappointing, and anecdotally, I think that the investment management fees are quite high. But as I say, we haven't got similar investments to benchmark against. I think perhaps we need to look at what other Welsh Church Act investments are getting on their investments, and do a piece of work around whether the yield is reasonable, whether the investment management fees are reasonable. We've been with precursors of Tilney for a number of years, and we haven't done a kind of benchmarking procurement exercise, although the timing is quite difficult to do this. But I think it just a benchmarking exercise would be useful at this point.
I personally think it's no harm in doing that. Kevin, do you want to come in on this?
Yes. Well, basically, you'd have to put forward
a comparison of what similar sort of firms charge for their services, and also come up with whether that's what you referred to in benchmark, a whole list of a bit of research and a whole list of what other funds have been doing. I mean, if they're saying 3.8% isn't bad down on investments given the circumstances, well, on face value, I could do that without having studied the financial markets. But if we have a look and find out actually it's middling to poor, well, then that would be a reason for looking around. If it's considered to be good, then apart from the cost of the actual management, why would you move? The other thing is, in general, I've got to be perfectly honest with you, we've dictated as much ethical stuff as we can, to a certain degree. You can go on about fair trade, as you said, it's your own personal opinion, fine. There's a lot of issues about fair trade, as I'm sure you probably know as well, and disputes about that. But I think we'd all probably like any of our investments is something that's fair and whatever. But at the end of the day, whoever we employ, they're the experts. As far as I know, none of us here are running a hedge fund. I mean, basically, if we just had a half-hour explanation, which they have to do, on what a hedge fund manager, not a hedge fund, I should say, an investment manager does. Well, we could cut that down to 5 minutes, I think. We all know what they do. None of us really understand it, or we'd be doing it ourselves if we could make any money. So basically, the 2 points are they comparable with other firms for the costs that they're charging us? Has their performance over the last year been good? And we'd need to look at other parameters or indicators to see that. If they're fine, leave them to it. I think the only thing we should really be looking at is that risk thing. I almost got an impression that they want us to improve our risk. Well, that would give us more money, but I think at these times that would probably be a bit dodgy. Investing in gold, as they said, that's okay to protect the actual capital. Possibly, we know that gold is very high at the moment, so it could go down again. None of us are gold traders, I wouldn't have thought, and we don't get any money back off that, do we? So these are things that strike me.
Thank you very much. That's a good summation, Kevin, of what they said. And I thought, I think there's no harm in benchmarking, as Gemma rightly says, and I think there's no harm in doing so. James, do you want to come in on this?
I think one thing I was going to mention, I wonder if it's a case that this is a company sort of that we have been with for a very long time, whether a benchmarking exercise might be a good point for kind of if there was any kind of charity commission audit of the way we run our money, if we're spending almost half our yield on the actual service being provided, whether there's some value in just for an audit trail being able to say that we've looked into it.
I think that's a helpful remark. Kevin, do you want to come back on that?
Yeah, it's just only one thing. As many of you may know, that I never really say anything that I ever bother care about being repeated, otherwise I wouldn't come out with it. But isn't this meeting being transmitted on the public web or logged for that? So aren't we actually discussing business matters in a public forum, or if I misunderstood what's going on?
As far as I'm concerned, I mean, the job of us trustees is to maximise the income. And I think the discussions we're having are mostly about that, and that's the aim of the trustees. I don't think we're going into the firm itself. I just think there's no harm in doing a bit of benchmarking, and I think that's what I'm trying to move members towards. But I mean, it's obviously I'm in your hands as to what your feeling is about that. I mean, if I make suggestions, perhaps maybe we do some benchmarking and to look into other organisations. And I think James's point about an audit trail is a good one, because I do think we should be looking at that in terms of charity commissioners. Actually, they probably would expect us to do a bit of looking around other advisors. And also, I think Gemma's point, there's no harm to look at, other firms when it doesn't mean any commitment. You would expect us to do that occasionally, to do that. And I think we've got to bear in mind we have got a volatile market. We've got a lot of uncertainty. And although we've got some good points they made about they think we will raise that £40,000 that we need, but it's also been pointed out that's almost half the charges that we pay as well. So I do think we need to look at that. But I just wonder, does anyone would second my recommendation? Yeah, Councillor Drake, Councillor Cox. Okay, we're all happy with that?
Yeah, I'll second it as well. But
Thank you very much.
I think most of these wealth advisors, if you look at them, you'll find they've all lost money on the portfolio value, and the income levels have also dropped. It's a question of how much has one deteriorated versus another investment advisor. But I think they're going to be consistent in the way the market has gone.
All right, thank you for that. All right, we're now going on to the next.
Can I say something, Mark? You know,
sure.
It's been down our throats for a long, long time to shop around, isn't it? You know, with the insurance, all different things.
Yeah,
and I think we should be taking that on board, because we are spending an awful lot of money on this company.
Yeah. Okay. All happy to move on now? Yeah. Gemma, do you want to say something quickly?
Chair, can I just flag the issue around the gold? I don't know whether we were going to have a discussion about that, whether you want me to find out as part of the benchmarking exercise what other Welsh church.
I think we also need to find out about the remit. If we got a remit where we largely ethical, I'd like to see the minutes of that and to see where the stance comes from on that at all. That's what I was thinking before whether we can move our portfolio or change it, because I really don't know.
Yeah, I think that came from a previous Welsh Church Acts committee, and I can confirm the committee that the conversation took place in. I can circulate the date of the committee if that's helpful.
Perhaps maybe we could agenda that on for the next meeting as well as the benchmarking exercise. If you think we have sufficient time to do that in the next few months, Gemma, is that all right? Fine. Okay then, thank you for that. Can we move on to applications for financial assistance? I think it's yours, Gemma. I can't hear you, Gemma.
Okay, hello, good evening.
I can hear you now, that's good.
Applications for financial assistance 2021. If I could jump around a bit in this report, but if we could look at Appendix C first.
Okay.
I've based my income projections on, in terms of property rents, we've received the vast majority of those property rents so far this year. So there's no reason to think those are going to be significantly hit by COVID-19 this year. But I have assumed slightly less in year just in case. In terms of the projected investment income, I've based this on a slightly reduced amount of the projected income from the Tilney report. Historically, we received slightly less than has been shown in that report. So I've based that on kind of historically what the difference is. In the report, you'll see a recommendation that there's a couple of grants that are outstanding still from 17-18 that amount to £10,000. I proposed as part of this report that we look at informing those organisations that they'll need to reapply for their funding, given that such a long period of time has elapsed since they were awarded. And then assuming that that is agreed to, we'd have £46,500 to allocate for grants in this financial year. The grants are set out in Appendix A to the report, which I will run through now. So the first award is one that's recommended by Cardiff, the Holy Family Catholic Church. So this is a venue in Fairwater. It's a very important community space, but the criticism of the area is that it's quite cold. So this will be the supply and fitting of a new heating system. In terms of the funds, given that we have limited funds available, we took into account the amount of reserves that the organisation had, and therefore we were proposing that a grant would be recommended of £2,500. Moving on to the next one, Tabernacle Baptist Church, again recommended by Cardiff Council, and this is around disabled access to the facilities. It's quite a large scheme with a number of other income sources and grant applications. So proposing an award of £5,000 here, but awarding in principle pending the outcome of those grant applications. St James's Church, Wick, and a project to establish a health and safety environment. So they have some damp and safety hazards at the church. And again, quite a large scheme with a number of different grant sources, and a proposal, again, of £5,000, but to be made in principle pending confirmation that the scheme could proceed, because there was a shortfall in terms of the church's contribution there. Barry Romney Bowling Club, and this is a scheme to attract new younger members to the facility, and to cover membership costs, take into account the limited funds and also the kind of amounts that were held by the club. There's a recommendation for no funding for that application. We have an application from Multiple Sclerosis Project, and this is across Cardiff and the Vale, to provide support post COVID-19. Taking into account, again, this is quite a large organisation, and the funds available, proposal toward £2,500. Salem Baptist Church, Barry, looking to provide by-parting automatic doors and purchase new stackable chairs. Again, taking into account the funds of the organisation, proposing to award £2,500. Vale of Glamorgan Brass Band, looking to convert the toilet facilities so they would be suitable for disabled access. There were two options that were put forward. Take into account the cheaper option, looking to award 75% of that projected cost, so £2,304. And then finally, T Haven Children's Hospice. This is a large 20th anniversary refurbishment for an area known as a transition suite. This is a scheme that was referred to us from the Strong Communities Fund, as it didn't meet the award criteria. Again, there are a number of different applications in as part of this scheme. So looking to propose £5,000 there, but made in principle pending confirmation that the scheme can proceed.
Okay, thank you for that. Are we all happy to proceed on that? Yep, I haven't heard anyone dissenting. Okay, all happy? Thanks, good, excellent. Okay, you want to move on to the next agenda item. Okay, one of the things before I think we finish on that, on number 5, is obviously one of the things we don't do so much is publicity. When we award these awards, I think we should publicise the good work that we do as a committee. And I think that's something we could do, maybe a couple press releases with these bodies. And, you know, it's quite common practice amongst other organisations when you give out money, that there is some sort of, you know, thank you or check or whatever we can do. And I think that's something perhaps we should move on, perhaps. Okay. And the other thing I thought, yes, Pam, do you want to come in on that?
I was just going to say that also highlights it to the general public, these particular organisations, because a lot of them don't know about them.
Exactly. It may actually help them organisations to get more funding that way as well. So I think perhaps we should do that. Okay. I also think it might be a good idea, perhaps maybe post-COVID, perhaps, is that we revisit some of the places that we have awarded in the past to see what improvements the Welsh Church have done, you know, especially to these places of worship and other places that we do some good work there, you know, of previous chairs on the committee. And I think that'd be worth doing that as well. So, you know, perhaps maybe we can do that optimistically. I think fingers crossed in the summer, you know, and I'm being optimistic. All right, then, thank you for that. All right.
Yeah, can
Councillor
I
Marnie wants to come in. Sorry, Councillor Marnie. Yeah.
Oh, that's okay, no problem. I don't know if there's an unfortunate choice of words there. It's not the good work that we do. All we're doing is doling out money. It's the good work that the fund does, not the individual.
Absolutely right. Absolutely right. So, you're absolutely right, Kevin. All right. Thank you for that. All right, then. So if we now move on to the annual report and accounts, please.
Okay, thank you very much.
Yeah, sure.
So 1920 was a relatively straightforward year until we got to March last year. So there has been a movement on the fund balance. You can see there's a reduction of 127,000. This is largely due to a fall in the investment balances as at 31st of March. As you would expect, we had a reduction of 121,000 compared with the previous financial year. There was also a deficit on the unrestricted funds. So if I just take you through the report. There was a deficit in year on the funds. So you'll see that our investment income was reduced by 7,000 when compared with 18-19 and reduced by 12,000 when compared with 17-18. We had reduced the grants allocation in 19-20 to take account of that in part, but it wasn't sufficient. There was a very slight increase in expenditure of £1,000 relating to repairs and maintenance. So as I mentioned, that the significant loss was on investments, 121,000, and that, as was picked up in the investment advisor's presentation, happened very quickly in March 2020. So we do have an unrestricted fund on the in the account of 112,000 as at 31st of March last year. And we have to kind of assess whether we feel that that is appropriate, taking into account the value of our investment assets, investment properties, which are set out on the balance sheet, which is on page 10 of the accounts. So investment properties were at 3.2, just over 3.2 million. We feel that that's reasonable.
Have we lost you, Gemma? I think we lost her. Going to try and get one. We're going to try calling you, Gemma, if you can hear us. Any luck? Okay.
Councillor, did you want me to just do a quick update on that £30,000 point whilst we're waiting for Gemma to come back?
Yeah, I think when Catherine's on to, yes, yes, James. If we can do that now, please, James.
Okay, yeah. So I'm just dragging it up. So there was in the accounts
James, sorry,
yeah.
Before you proceed, just going back to Councillor Marnie's point made about the fact that this is a meeting that can be viewed in terms of any legal advice. Just making that point.
Fine.
In terms of the 30,000. Yeah, I mean, I think the update is probably going to be that I'll need to provide a more detailed update at the January meeting. Insofar as there was some money allocated to a potential sort of highway scheme on some land we own, but a number of legal issues have arisen, and that's why that money is still allocated. So that scheme hasn't been taken forward. There are some issues that I'm going to be looking into. Hopefully we'll have a report. We'll be able to bring a report or a further update to the January meeting.
Fine.
Hello.
Okay. Hello, are you through now? Yeah.
Hello.
Gemma,
Sorry about that.
That's right.
So I think we feel comfortable that the reserve balance is appropriate, taking into account the balance of the investment properties. Other than that, I think, as I said, a relatively straightforward year on the accounts. In terms of the process now, Wales Audit Office will now conduct an external examination over the next couple of months, and we're required then to file the accounts with the Charities Commission by the end of January 2021. So that will be taking place over the coming months. And obviously, if Audit Wales pick up anything significant, then that will be reported back to committee with the amended accounts in January. Okay,
Yeah.
I'm happy to take any questions.
Yeah, any questions on the accounts, please? Any questions to anyone? Are we happy to move them then?
So moved.
Okay. Yeah, thank you very much. Okay, we're now moving on now to urgent items. Now there are 2 urgent items which you may have received, you should have received. 7.1 is the update on land of Glee Fields, and I wondered perhaps if Lorna and James could present that now, please. And also I got a part 2 on the same item as well.
Thank you, Chairman. I'll start off, but thanks very much to James and to Nathan Slater, who's also joining us, the Senior Planner from the Vale of Glamorgan Planning Authority. James has been liaising with planning colleagues in the Vale over the last couple of months in respect of the process that we discussed back in February. So this report aims to provide an update to committee in respect to the procedure for the promotion of Glebe Field as a candidate site in the Vale of Glamorgan LDP review. And that updated since the last report, as I referred to in February this year. It provides an update on the timescales and procedures for the promotion of the site as a candidate site and the documentation on evidential requirements. It also recommends that the committee instruct the planning department of the Vale of Glamorgan Council to prepare a development site review to inform the committee of the potential suitable land uses going forward. And the report also updates the committee in respect of an unsolicited offer received from Selly and Lavernock Community Library Trust for 2 acres of the site, and that's come in since the last meeting. In terms of background, committee will recall that the matter was last discussed at the meeting of the 24th of February, where committee received advice from Messrs Cook and Arkwright by way of a written report as qualified surveyors, and they recommended that the trust hold the land and promote the site at the next LDP review for residential development. But I go on further, it's not purely residential development, but I go on further in a second about that. The trustees resolved at that February meeting that officers and planning colleagues discuss the way forward, and we seek clarification in terms of what options are available to committee in terms of the promotion of the site in the next LDP for mixed use for housing and community facilities / amenities, how best to proceed with such a promotion of the site if the committee were minded to do so, and also advice and recommendations are set out in the report following that last couple of months discussion between James and Nathan. So the main points to consider by way of an update is the LDP review is likely to commence in June 2021. Nathan, step in if I've got anything wrong and you want to update further on this or put me right. The nomination process will require the submission of a candidate site form, which requires substantial amount of evidence to support the nomination and the resultant costs in relation to the preparation of such evidence. And the planning department has suggested that development site review, a DSR, is conducted on the land to assess the uses, in particular any mixed uses. And if following consideration of the DSR, the Trust wanted to proceed to make a formal nomination for the site as a candidate site, the DSR would form basis of producing the supporting evidence required for the candidate site form. And whilst the planning department, the council's planning department would be able to produce the DSR, the Trust would, if it wished to progress with the nomination, be required to employ an agent to prepare and submit the candidate site form and supporting evidence. In addition to the work with on the planning front, since the last committee meeting, it says March in this report. Apologies, that was the typo. It should be February. A letter has been received by the former chairman of the committee, from the chair of Selly and Lavernock Community Library Trust in connection with the land, and that matter is subject to the report under part 2 of this agenda. The key considerations to consider for this Part 1 report in the event the committee are minded to continue to progress towards disposal of the glebe field, then is just a reference to section 117 and 119 of the Charities Act. And committee as trustees are to act in accordance with the qualified surveyor's recommendation or obtain permission from the Charities Commission to dispose of the site in accordance with the other than in accordance with the qualified surveyor's recommendation. So if the committee are minded to progress with the nomination of Glebe Field as a candidate site for the LDP review, then additional information would be needed to be contained with the DSR, and would ask committee in identifying on what basis to nominate the site and form a starting point for the evidence required in such a nomination. And of course, the committee are reminded that we're under that you're under no duty to dispose of the glebe field if it chooses not to. So under financial considerations, the Trust are asked to consider the cost of the DSR, and we've been indicated a cost of circa £1,000 to put that in motion. And just a reminder that the Trust has a duty to manage lands and property held by them in accordance with the scheme of trust and charity law, and as set out in the report there. The recommendations in terms of the Part 1 report, so the committee note the procedure and the process of proposing the glebe field as a candidate site for the Vale of Glamorgan Council's LDP review. The committee instructs the Vale of Glamorgan Planning Department to undertake a development site review at a cost of circa £1,000, and that committee notes the reference to the Part 2 agenda item. Nathan, I'm not sure, or James, if you wanted to come in and expand on any of the points there for the committee.
Yeah, do you want to come in, Nathan or James, on that? Or do you want to wait for members to ask you any questions?
I was just going to say, unless Nathan's got any points that he feels need sort of clarifying at this point, it may be easier if members have got any direct questions relating to it that he could answer.
Okay.
Yeah, no, I'd be happy to take questions. Sorry.
Yeah, fine. That's okay. Nathan, anyone got any questions? Yes, Councillor Mahoney.
Yeah, that's excuse me for being a bit. Yeah, can you hear me now?
Yes, I can.
Yeah. So possibly appearing a bit dense. So we actually in Part 2 or still on?
No, we're still in Part 1.
Because
we haven't moved
quite
Part
a few.
2.
That's fair enough, because there's quite a number of points I'd like to make upon this, but and I conversed with James last year, who offered advice on what's what, that I think I could only ask in Part 2. So are you suggesting we should be having a vote now?
We haven't moved Part 2, and obviously we've got recommendations to consider under Part 1 first. Okay.
Well, fair enough, but part of that is tied up with James' advice of last year. Well, basically, should I be pointing out the advice he's given in confidence as an officer in Part 1? I don't mind doing that if that's fine with you guys.
I don't mind. I mean, so long as we feel we're still in Part 1. Okay.
Well, advice I was given was, well, James looking concerned now because he can't say anything private, obviously. So you tell me. I don't care. He had to unmute himself.
Sorry, I was just going to quickly try to remind myself what the advice was.
As regards the duty of a member of this trust in realising the full value of disposed lands, and that a surcharge could be charged against any member of this board or trust, if you like, or trustees, if they don't do that, which I've obviously pointed out would mean there's no point in having a vote on anything if we can be surcharged if we voted against getting the most. Now, I understand what's being proposed here is whether this is forwarded to some sort of the LDP or something, which isn't a vote on, well, is it a vote on disposing of the land?
No. Yeah, no. So the recommendation here is what we've had is a qualified surveyor's report, which is what is required in relation to any proposed disposal by a trust. Within that was a recommendation on what the qualified surveyors considered would be the best approach in terms of maximising income. But at the same time, there's no duty on the trust at this point or in the future to actually continue with a disposal. But at the same time, yeah, there is a duty to obtain where you are disposing to obtain best value. And there is a potential legal risk in terms of if it was found that trustees voted in a way that resulted in a disposal that didn't obtain best value for land, then potentially there could be a surcharge. But I don't think anything that's been anything within the recommendations put forward today is in any way kind of going towards that. This is purely acting on the basis of the recommendations put forward by the qualified surveyor.
Okay, do you want to respond, Kevin?
Yeah, so I don't mean to be hogging things, but obviously I have to pursue what we're on about. Well, unless I misunderstood what Lorna said, and I think you just touched on it yourself, the surveyor, it actually said that we're obliged to follow the surveyor's advice. Well, the surveyor's advice is, it was to possibly flog it or put it on the LDP. So that contradicts it, doesn't it?
No, it doesn't, because that's only if the trust was minded to dispose, because if there's no issue, the trust would not be in breach of its duty by holding on to its land and holding on to its assets. All it means is where you've got an asset that you're seeking to dispose of, there's a duty to take professional advice in order to ensure that you're obtaining best value.
And I don't disagree with that, but we're having a vote now on to whether to put it forward for disposal of. We've already heard, I think, whether it was from Nathan or one of his colleagues last year, that included in the report is the difficulty of getting any building done on that site because of the amount of building that's going on in Sully and the other area at the moment, including the social building and all the rest of it. So here's the thing. Why are we voting I realise what a vote is, a democratic process, to put it forward to an LDP here. We've had, as Lorna has said, that's the matter I was going to bring up actually on the side panel there, is that we've had a bid from one concerned party, which again, I stress I have no links with whatsoever, have made a bid of some sort. I don't even know what that is. That's how unconnected I am to them. So if somebody's put a bid in for part of that land that the councillors here or the trustees think is a decent bid for a laudable aim and a decent value for money, as you quite rightly point out, which is the strictures that we're under, then surely that should be considered as well, shouldn't it?
Yeah, I think the one thing I'd say is, again, that the recommendation isn't to vote to dispose of the land. The recommendation is to carry out some additional works if a potential disposal is something that we are still considering. The way in which we were advised would be best to do that would be by nominating it as a candidate site. In order to make the decision as to whether you want to move forward to that, what we're saying is that a development site review by the planning or by the planners would enable you to have a better understanding of what uses would be best suited to that site, not only in terms of pure cash recovery, but also in terms of what, from a planning perspective, might be possible. It may be that a full residential scheme wouldn't be possible. It also could be the case that a full residential scheme wouldn't be something that the trustees might want to look at, and they might choose to hold on to the land for a further number of years to lease it out, and hold as an asset sort of until later down the line.
Yes.
Okay, do you want to come back on that finally, Kevin, at all?
Well, yeah, it's something that's got to be discussed. I'm sorry, I'm conscious that I'm hogging a conversation here, but it's a conversation. If it's got to go on for an hour and a half, it's got to go on for an hour and a half. Now, the situation is, and I go back to it, if somebody has put a bid in, whether you've mentioned the Sully Library Trust or anybody else for that matter, for a slice of that land, then surely that has to be considered, and the best value got for that land.
Kevin, we are going to consider it under the next item, but I don't want to just consider it now. All right?
No, but
if I come
that's fair enough. But I'm still saying the advice, and perhaps I am being dense, is the fact that if any of that land is put up for sale, whether in slices or en bloc, we don't actually have a vote. We can't have a vote because, as according to your advice, that we must raise the best value for that land that we can. I'm not. Who am I to dispute that? But the point is, there's no point in voting on it, is it? It's academic.
Kevin, I think what James is saying, and I will get other people to come in a moment. What James is saying, you basically have got two options here. If we decide to move to the recommendations, support the recommendations, then basically we're given two choices. The two choices are that we could either retain the land if we want to, or alternatively we can sell it. But if we sell it, it's on the basis of it probably going into the LDP process, on the basis of it being valued, on the basis of its uses. At the moment, by the fact if we go on to these recommendations and support them or not, if we support them, that means we've taken a process forward. If we don't, then we're not taking a process forward. Correct me if I'm wrong, Lorna. And James.
Thank you, Chairman. Yes, I mean, the report isn't asking for authority to dispose of anything at this time. It's asking for authority to move forward a process which is recommended through planning colleagues. Now, if committee don't, as the report says, that the trust don't have to declare land surplus, don't have to dispose of land if that is the decision of the trust, of committee. So I suppose the decision that we're asking for under the Part 1 report is to allow officers to move forward with a process under the planning requirements, and then we would report back to committee with the results of those discussions and applications. Now, it's within trust's remit then to decide that based on the outcome of that, if you do recommend today, you resolve today to go with the recommendations, there's absolutely no obligation to do anything with that after that. So we would be reporting back. So it's not a request for a resolution to dispose of the site at this time. It's a request to go ahead and do a bit more work and to engage the local planning authority officers to do that work on the trust behalf.
Okay, I hope that clarifies the situation. All right, and can we move to the recommendations? Are you happy to support the recommendations 1 to 3? Yes, Councillor Cox does, Councillor Drake, Councillor Marnie. Yeah, okay. Anyone dissenting? No. Okay then, thank you. We now move to the Part 2 report now, please. Can we have a second? Can we also, yeah, we have got a second there. That was Councillor Cox and then Councillor Drake. Can we now move Part 2?
Move Part 2.
Thank you very much. Okay, we now move to the second item on the agenda, which is the Part 2 report. Lorna or James, do you want to present it, please?
I'm sorry, Chairman. Can I just let the attendees know that they need to now leave the meeting as we've now moved to Part 2 and it's confidential. So anyone who's present as an attendee, if you are please able to leave, I can see that you're present. If you can't figure it out, I can dismiss you from the meeting. I'll give you a couple of seconds just to do it yourselves first. Right, so to confirm, Chairman, that the only people left on the meeting at present are committee members and officers as expected, and for the sake of the recording, I'm going to confirm at the moment that we will stop recording now.